Ah, yes, the good old gold, the shiny precious metal that everyone knows and loves. Something that I'm pretty sure your mom, your dad, auntie, uncle all knows. But why did so many people start to put their money in gold suddenly earlier this March? And for some reason, many of you recently have also asked me on how to buy gold and whether or not it's a good investment. Even those people around me are all asking the same question. And the gold price is now hovering around 2,000 US dollars per ounce or about $64 per gram, and it has increased about 8.4% since the start of this year. So yes, it managed to stay shiny throughout all the banking chaos, but why is that so? Okay, first things first, you need to understand that gold and the US dollar have an inverse relationship, meaning when the value of the dollar goes up, gold prices tend to go down and vice versa. And the reason behind this is very simple. Gold is priced in US dollars globally. So when the dollar becomes stronger, it's cheaper to buy the same amount of gold, hence lower gold prices. Makes sense, right? So basically, as long as investors still see the market as doom and gloom, they will continue to put money into gold. For example, let's look at the most recent world crisis, COVID-19. We all know, right? During the outbreak, we had God knows how many lockdowns, which led to disrupting supply chains worldwide. So investors all flocked to the so-called safer assets, and that drove up gold to an all-time high of over $2,000 per ounce in August 2020, and this is surpassing the previous record high in August 2011 of 1.9k US dollar. However, that did not last long because when the vaccines came out in the first quarter of 2021, the gold prices started to drop and it has its worst start to the year in almost a decade, which brings me to my next point. Just how reliable is gold as a safe haven asset? You see, generally people would invest in gold during bad times to hedge against currency fluctuations, and unlike our usual currencies like US dollars, ringgit Malaysia or Singapore dollars, which are usually backed by how the country performs economically, gold, on the other hand, is an actual physical commodity where its value is determined from its global supply and demand. And the 2008 global financial crisis is a powerful example as stock markets plummeted left and right because of the subprime mortgage market bubble in the US, together with a series of high-profile bank failures like Lehman Brothers and also Bear Stearns. That all triggered panic in the global financial markets where the currency started to fluctuate aggressively. So naturally, people will go and park their money in gold during that long period of uncertainty because again, it's considered as the safer asset as compared to everything else at that time. And if you also look at the history of gold price, it has consistently maintained its value. In fact, it showed a consistent upward trend over the past several decades. Pretty impressive, right? And although it fluctuates from time to time as well, in the short term, people still buy them because of its scarcity, as it's something you can't print like paper money, or we call it the fiat currency.
Gold is the only currency that can't be printed. And I can tell you in the mining business, you almost can't really find it in any size any longer.
And if I were to compare gold's mining output with say silver, the global silver output was as much as 25 metric tons, whereas gold is only 4.2 metric tons. So my friends, do you see the difference and why is gold so precious now? And while there's no guarantee that gold may earn you super large returns, it won't suffer huge losses either. So here comes the question, what about its performance against other asset classes? Honestly, if you want to compare gold with stocks definitely have higher risk because equities are a form of business, and naturally, businesses are subject to market fluctuations like economic downturns, corporate earnings, and change in industry or consumer trends, which can obviously impact the business in many ways. But this also means they can offer higher potential returns. High risk, high return, right? And if you look at gold's performance against the S&P 500 index as of September 2022, gold lost 7.4% since the beginning of the year, and the S&P 500 declined as much as 21.7%. Yes, indeed the precious metal outperformed the stock market, but when you zoom it out on a 10-year period, the S&P 500 still outperformed the price of gold. Now, on the other hand, yes, bonds such as the US Treasury bonds can also serve as a safe haven asset during periods of economic uncertainty. But of course, not all bonds are equal in their ability to withstand economic stress. Some are good, some are bad. But gold has shown to have the potential to deliver returns during period of uncertainty. So if you really want to compare them side by side, both technically have different functions. Gold is often used to hedge against inflation and also currency risk. Meanwhile, US treasuries may have less excitement, but it can provide you steady income over the long run. And speaking of US treasuries, if you want to know how to buy some with interactive brokers, you can check out my quick and easy guide tutorial here. Well, my point here is gold is just a brick. Yes, a shiny brick, and a high chance it might not outperform stocks in the long run. It's more for asset diversification. Just like why we have bonds and cash, it's not because we think they will outperform stocks in the long run, but because they may be valuable diversifiers for the long run. Now, what about gold versus other precious metals like silver? Well, how they perform actually depends on two factors. One, its intrinsic value like their rarity and durability, and historical use of store of value. And for example, gold is known for its resistance to corrosion and also tarnish. As for silver, it's durable, yes, but it's also more prone to tarnishing when it's exposed to sulfur in the air. Then it will start to darken and lose its luster over time, and that's why your grandma's gold necklace still looks shiny until today, simply because they can last longer as a store of value. And the second reason, industrial and consumer users. If you didn't know, precious metals like gold and silver each have a diverse range of use cases included in electronics, jewellery, automotive, etc., which influences the price that people want to pay for the asset. And gold, for instance, is used in connectors, switches in electronic devices, and aerospace applications to protect sensitive equipment from radiation and also heat. Silver also has a wide range of application for electronic devices, including printed circuit boards, conductive inks, and because it has antimicrobial properties, it's also used in all sorts of medical applications. My point is, it's easy to assume that silver is second to gold, but the truth is, gold has a much larger and more liquid market compared to silver, as the higher trading volume and overall market value of gold make it a more accessible and stable investment option for most investors. And while silver is also traded in global markets, its smaller market size of $1.43 trillion as opposed to the $13.3 trillion of gold can lead to more significant price fluctuations, especially during periods of downturn in the market. Okay, so after hearing all of what I had to say about gold, did you know that there are a few ways you can buy gold? One way to do that is to purchase physical gold like coins, jewellery, and also gold bars from a shop or dealer, and this usually involves paying a premium over the spot price of gold, and this would be suitable if you prefer something tangible, which is probably the reason why you are still watching up until this point of video. And the second option is to invest in gold mining stocks such as Barrick Gold Corp, GOLD ticker, and through this you can gain exposure to gold mining through the performance of a company involved in gold mining and production. But something for you to note is that mining stocks can be influenced by the company's business operations, management decisions, etc., etc. And what's also worth noting is that Warren Buffett's Berkshire Hathaway had previously bought a pretty huge stake in Barrick Gold Corp, but later on sold it, which may also be a consideration for some of you as investors. And the third way, which I think is the best way, is to invest in gold ETFs such as the SPDR Gold Shares ETF GLD through interactive brokers. And the main benefit is that it tracks the spot price of gold together with a super cheap brokerage fee of just 35 US cents per trade, on top of convenience and liquidity. All you need to do is to sign up for an account, search for GLD in the search bar and buy. That's all you need to do. So feel free to use my affiliate link down below, and by doing that you will also support this channel for free. Thank you so much for that. So to summarize all of this, you will want to invest in gold for these few reasons. One, you want to park your money in a safe and stable haven for your money. protecting it from currency risk or fluctuations, or 2, you are just looking for another form of portfolio diversification and store of value. Simple as that. Alright, that's all I have for this video. Let me know what are your thoughts on investing in gold, or if you are personally invested in some. Thanks for watching, and as usual, I will see you in the next one.